Good evening. Welcome to SPY Intraday Price Action Recap on movement charts. After printing the shooting star candlestick on Friday, SPY today opened a gap down, took support at this support level of 715.5 as we discussed in our weekly analysis, and moved back to close at 718 level today. There is not enough bearish confirmation candlestick yet, and you can see that price respected this support level and the 5 EMA closed above 50% of this fair value gap. So on the daily time frames, SPY is still on the uptrend, respecting the short-term moving averages as well as the heavy support level. Moving on to the hourly time frame. So on the hourly time frame, SPY printed a bearish engulfing candle like the one it printed on the last hour of the session on Friday. Today also it printed a bearish engulfing candle at the second hour of the session, mitigating this gap completely on the hourly time frame. So this may act as a resistance in the coming sessions unless if it gaps up, and it took support from the support level as well as this fair value gap level to print a bullish inside bar, and it just consolidated in this candle for the rest of the day, closed below the 9, 5 and 20 EMA on the hourly time frame. We have this trend line drawn to see how price reacts to this support levels as well as this trend line. Moving on to the 15 minutes time frame for the intraday price action analysis. So after opening gap down today, it took support of this gap as well as from this support level of 719. It printed a morning star candlesticks pattern, a doji followed by a bullish engulfing to retrace back and test this supply zone. It formed on Friday's session by printing a bearish engulfing candle and collecting liquidity above 20 EMA, which led the price to move from 721 level to 715 level. Or $6 move from this candle to this candle to test the support, and then it retraced back to test the 20 EMA on the 15 minutes time frame, and we can see it is still seeing rejection at 20 EMA and 15 minutes time frame, running at shooting star candle as well as a bearish engulfing candle and the follow through candle. So for the price to regain back into its uptrend, it needs to close above this resistance level, or at least close above this fair value gap level on 15 minutes time frame. If we close above and come back and retest, we may go forward. For now, it looks like a corrective way to retest this resistance, to retrace back down to test this support levels 712.5 or this fair value gap on the 15 minutes time frame, which aligns to this hourly trend line we have marked. So the near term support is at 715 level as well as this order block on the hourly time frame, and this fair value gap as well as this trend line. Resistance, the overhead resistance at 718.5, this resistance, and this major resistance at this fair value gap as well as the breaker block on the 15 minutes time frame. Looks like a bear flag on 15 minutes time frame, rejecting from 20 EMA. So major resistance, major support. Thank you so much for watching.